It's a big week indeed, and I'm sure many of you are wondering, is the crypto relief rally still in play, or has it already been cancelled? You can see the market is pulling back. Started with Asia, of course, Asia waking up and selling early into the morning. So let's get straight into it. We have a whole lot to cover. I'm going to give you the exact levels that I'm watching, as well as what you can expect leading into the FOMC meeting, which is the big event that's coming up tomorrow with the CPI results. So first and foremost, head over to my Twitter page. You know how it is. We do the surprise boxes every single day whereby you can win money. Go and have a look over there. It is available to vote on. You can see currently leading is box number 1. So you can vote for the next hour, or next 20 minutes or so, just before the end. Then I will pull those results. If you do want to get involved, the link is below with regards to what you need to do. You would have to sign up to BYBIT and deposit $250. But anyways, let's get into it. Enough of that. TED Talks macro covers over here that weeks don't get much bigger than this. Tuesday, US CPI core expected to increase by 0.3% month on month. And then you have pretty much, he says here, the Wednesday FOMC meetings, markets priced in with 78% probability that the Fed will slow the pace of the hikes to 50 basis points at this meeting. So remember, we had 75 basis points. This would be the first time that we're having a 50, and some people would call that a pivot because obviously we're going from 75 down to 50, but nevertheless it is still raising rates, so the interest rates are still being raised. And then he says, yeah, but more importantly will be the words used at the FOMC press conference, plus the forward guidance from updated economic projections. We will see an updated dot plot for the first time since September. So this dot plot over here, essentially what this denotes is it refers to all the different committee members of the FOMC. They project what their midpoint targets or their targets would be in the future, and we only get this update once every quarter, so it is quite important. And he says here, ING have laid out some potential scenarios that could send the market into risk off or on mode. I tend to agree with their outline. Dovish, and then he says, is risk on bullish, and then hawkish is risk off bearish. So you can go and have a look over at that. There is a whole bunch of different scenarios over here. They outline if the rates are X, Y, Z, what is the potential chance of the market rallying or not. So I'll retweet that from TED Talks. You can go and have a look at that. And at the end of the day, though, the Fed's balance sheet is still being reduced. If you look at Charlie Belelo over here, he says that the Fed's balance sheet hit its lowest level since November 2021 this week. It's down $383 billion from its peak in April and $250 billion over the last 12 weeks. Some perspective on how much the balance sheet expanded in 2020 to 2021. It's still $4.4 trillion higher than where we entered in 2020. Now, I don't expect that they're going to reduce it by 4.4 trillion. I mean, if they did, that would be pretty catastrophic for any risk on asset. I think that could potentially kill something like crypto, dare I say that, but that would be a terrible scenario. At the end of the day, though, they are reducing it, and you would expect price-wise for many of the assets, as I've mentioned to you so many times before, like the S&P 500, price-wise, you would expect that to retrace back to levels that it was at pre-COVID, so back in 2020. So do keep an eye on that. And then here you have Alex, who says 2023 will be interesting, and this is the tech layoffs within the tech sector. And crypto, crypto is essentially the tech sector itself. So you would expect there would be some level of correlation in this. And look at January 2022 with only 631 layoffs. And then it just starts to go exponential. We're currently at 59,710 layoffs. And in order for the inflation to be gained under control again, one thing that they look at is a reduction in jobs and basically an increase in layoffs to gain back control. And and the Fed have basically said that this is still nowhere near enough, so you can expect this will continue into 2023. So that is your little quick macro update. Now, where are we within the cycle? I found this quite interesting from Immortal. It's similar to this whole thread that I made over here, that on the high time frames, and he says here market cycles on Bitcoin, November 2022 update. There's the full article. If you do want to read it, just go through to his thing, to his Twitter page over there. But he shows you kind of get different types of capitulations within the market, which I have outlined to you guys before. You can capitulate in two ways, either with price, so strong sell-offs to the downside, basically flushing out the entire market. And then you can have a time-based capitulation where it's just sideways and incredibly boring for a long period of time before you lead into the next cycle. So he's calling this area right about where we are now. I hope you guys like my little green cursor, by the way. I thought this would help you guys to see what I'm looking at. So within this section over here is the potential cycle bottom, and that is the downtrend price base capitulation, which from top to bottom historically is 378 days, which is in line with what I've shown you on this chart over here, just prior to the 1 year before the halvening event is usually when you expect to find a bottom. So he's looking at something similar. Then you have the sideways time period with rallies, and that's a time-based capitulation. But for the most part, you want to be looking for an accumulation phase here, and that would look like this, where price just pretty much moves sideways. And then when you get to the halvening event, usually you rally just before that into the halvening, and then you find your cycle top about 532 days after the halvening event, which is basically the bull trend. That's your expansion phase, and a whole total cycle duration is around 4 years. It's 1,442 days. So if you tie that in with what I'm seeing over here, that means that technically you still could go lower. It is always a risk, but at the end of the day, you want to be looking for a bit of sideways traction, where that happens over here, higher up, or where that happens a little bit lower, like that, the rounded bottom. At the end of the day, this is the area whereby you do want to start looking for an accumulation phase. We are right in that zone, and I just wanted to touch on that and remind you guys of that. So if you do want to see the whole tweet thread, go look at my Twitter. It is pinned to the very, very top, and there is extreme value in looking at dollar cost averaging at these current levels. So pick your favorite coins, pick what you think has a network effect, pick what you think will be around for the next 5 to 10 years. There's very few coins off the top of my head that I could vouch for and say that they would last that long. Ethereum probably, Bitcoin probably, Chainlink probably. Those are just to name 3 off the top of my head. So go pick those, and those could be good buys in the long run. Now, if you are interested to move those coins offline and accumulate them offline, so away from a centralized party like an exchange, then go have a look at Biswap. They are a DEX, so decentralized exchange, and you can pretty much make all your purchases over there for the dollar cost average portfolio. Now, price-wise, where are we on the weekly scale? You can see a massive doji candle over here. Doji candle simply meaning indecision candle on the weekly chart. And we've opened the week to the downside. So bulls would want to see price action pretty much bounce today, but it's going to be an interesting week. As you can see, doji, everyone's undecided whether it's going to go up or down. If it does expand to the upside, it could get quite aggressive. It could go towards the $20,000 region. And if this takes out the weekly low and expands to the downside, well, then you're probably going to retest the range lows, which is just below $16,000, possibly even break it. So you want to keep an eye on that. Your weekly ranges, just mark out the top of the wick and the bottom of the wick. You have the weekly high at $17,418, and your weekly low is at $16,734. So very difficult to make a read off of this on the high time frame. Not much that can be said over here. I will show you on the low time frames the exact target levels that I'm looking at and whether I believe you should hold your longs or close those positions out. Now, volume continuing to decline on the 4-day chart. So far on the higher time frame here, it is looking more bearish than bullish. We temporarily reclaimed the short and the medium term moving average, so time frame moving averages over there, but have since started to sell off and lose it. Now, if this candle starts to close below the green, this would start to look like a massive bull trap, and I would think that we're going to go straight back down. If we can close above here, next target level remains just below $19,000, which is going to be the next moving average, the purple one over here. So that's your 4-day chart. Now, in terms of traditional markets, if you have a look over here, bears have outnumbered bulls in the AA2 sentiment poll for now 37 consecutive weeks, which is since April the 7th, with data going back all the way to 1987. So we have quite a bit of history over here. That's officially the longest streak of negativity that we've ever seen in the S&P 500. So all that I'm saying with regards to this is downside may be limited. It may be a good opportunity, as I've just mentioned, with regards to this chart over here, to start to look at a potential accumulation phase, at least with some of your portfolio. I'm definitely not saying with all of your portfolio, because maybe the market is very, very different now with regards to what the Fed is doing with the raising of interest rates and reducing the balance sheet, but at least with some exposure for a mean reversion play. Now, a mean reversion play, typically I look to on Bitcoin the 21 weekly moving average. And what would that look like if we did have a mean reversion play, which we've kind of already had since the lows over here? But if it were to continue to the upside, then it's currently coming in at around that $20,000 level. So if you do see price rallying up towards that level, that is where you want to start to become extremely defensive. Now is not the time to be aggressive, and it's also not the time to be mega short. But if you start to see price coming into that 21 weekly EMA, that is your zone. That is where you want to start getting very, very defensive and even considering a short trade. So on the S&P 500, it's been playing out pretty much exactly as I mentioned previously when we drew these lines over here. Price came into here and I said, look, I'm looking at this as a range. This is a deviation above the range, expected to come back into the range being the orange lines over here. I said, watch for a bounce off of the range lows. We bounced off the range lows. I said, now you want to look for the next deviation. For those of you who had missed the opportunity to run a swing short on the S&P 500 futures, so ES1 with the exclamation mark, that's the tick over there. Here would be your chance. Price comes back up, and then you're looking for a bearish retest into that trend line. We pretty much got that. It missed it by ever so slightly, but that's kind of the level that we've hit now, and it's curling back over. So let's see how this week plays out. If the obviously the interest rate is much higher than expected, then I would anticipate this is going to break through the bottom of this range over here, and then you're going to have your next momentum trade to the downside. One of the most important things to look at is if you simply just put this chart on a daily, and all you need to do is you mark from the bottom, so COVID lows, to the top. And you guys who have traded for quite some time will know about the golden ratio, which is the 0.618 on the fib level. And that is coming in all the way at 3,180. So do keep that in mind over there. Same thing over here, simple trend line coming down, hit off that trend line, looking like a major rejection. This week we'll see if we're going to get continuation of the pullback towards the downside, and then there will be bounces along the way, of course, and the levels that I'd be looking at is the next area of interest is 3,758 on the S&P 500 as where some support would be caught, but I would anticipate price would then just bounce off of that and probably continue on to the downside. So that's what I'm looking at, high time frame. Bitcoin on the 3-day chart, we did get the MACD cross. I mentioned on the previous show, in case you missed it, the previous 4 times that we had that MACD cross towards the upside, you got a minimum return of 26.5%. Maximum is up to 65%. So if you got that minimum return, it would take price up to 21,000, which would come directly in line with this area. It would still be forming a lower high, but it would break the momentum of that downtrend, which could be quite interesting. At the moment, we're still consolidating, so I will be keeping an eye out on this in case it is a trap. in order to confirm if this is a trap, unfortunately, you need price to go down lower to give you that confirmation. And what would that look like? Well, if you see price come anywhere below here, so if you see price take out this level, I'll put this in over here. On a closing basis, if price comes back below $16,408 on Bitcoin and it closes even a 12-hour candle underneath there, that would look like your next major lower high, and that would have been a big, big bull trap. I would expect the MACD to cross back down after that. So that's what I'm looking at on that chart. This chart over here, this is the daily chart with our different moving averages. Let's just make it bigger. What I was looking at, and I outlined this to you guys previously, we marked out the vertical areas, which is the CPI data, and then the following day is the Fed decision. So that's coming on Tuesday and Wednesday. My expectation was a rally into this level. The question is now, is that rally over? Are they front running it? Are they exiting their positions to de-risk now before that news comes out? Well, possibly. So should you be closing your longs? I would say the answer to that is if you took the long where I gave it, which I'm going to show you on the lower time frame now, but it's down here. If you took it when I gave it, you pretty much can still hold because you're not underwater yet. But as soon as this level closes on a daily basis underneath the open and close from the 7th and the 8th of December, then it would start to look like a bull trap. You would start to lose all the important moving averages over here. And then I would say, yes, the guys are probably front running this to de-risk into this event, and prices are going to go lower. Once you lose this level, you need to look down, and your next zone is going to be first area of interest is going to be here at 16,200. Next level is going to be all the way down at the range low just below 16,000, which is similar to what I just showed you on the weekly chart. But if the long holds true and this just looks like a temporary sell-off and the day closes back green over here and this is left as a wick, then your next target remains the underside resistance, which is coming in at $18,150. That is my ultimate target on a long, $18,150. Here's the trade that I gave. So as mentioned, if you took this trade, should you hold it? Yes, you can probably continue to hold it now. A lot of people, what you may have done is you may have already reduced the risk on this. You may have taken this like that and moved it to break even, right? Now, the only issue with that is if you do move this to break even, then ask yourself, what is this area? On the horizontal, this is still strong support. So what happens when you're in a long? So you're in a long, you've bought, and then you put a stop loss. A stop is essentially a buyback, right? A sell. A stop is essentially a sell on a buy order. So that means that you would be selling support. Does that make sense to you guys? You don't want to sell support. You want to buy support. Why am I'm mentioning this? The reason I'm mentioning this is because I think that it's still beneficial to hold my long that I initially took from here. If anything, I will actually re-add into that. So let's just quickly bring the stop area back. If anything, I will rather re-add into the support and make my position bigger into the support level, and my stop remains over here, which is at below those previous lows at 16,660. That is my main area. So I hope that makes sense. You put a buy order, you buy up. When you put a stop loss, it's essentially a sell order. So you're selling support. I hope that makes sense. You don't want to sell support. You want to buy support. You want to sell below support if it loses that and it's confirmed to go down. Take profit, 18,150, continues to remain the level, and that is based off of a liquidity grab. Look at the price action over here. This is the open interest chart on an hourly, which I've just refreshed prior to the show. Now, strong horizontal level at 6.9 billion. Every time that we seem to tap this level, you'll see the leverage gets reset and the guys seem to go long. Price goes up, come back down, test it, long. Come back down, see, test that level, long. Come back down. We've just tested that level once again. I'm holding my long. I'm going to keep my long. I'm sticking with this at least until tomorrow. Maybe tomorrow I'll de-risk because, you know, you go into those events. It's extremely chaotic price action and pretty much as a trader, you probably don't want to be trading into those events. So that's what I'm looking at over there. If you look at this, spot continues to sell off. This keeps getting fluctuating. This is the stablecoin futured cumulative volume delta, which is the leverage traders, essentially the USDT and USDC leverage traders. They run it down. Price action pulls back slightly. That lines up with the open interest coming into these purple boxes, and then they go long again. They run it up, it goes to the top, and they reset. And kind of, I think this is just a reset phase where they're going to go long again. Spot, which is talking to the investors, anyone that's holding long-term positions, you want to be careful. It's still a downtrend. The downtrend has not changed. So short-term traders can go long. Now, Crypto Nova gave quite a decent little thread over here. I'm going to go through it very, very quickly. Let's zoom in. So he says here, BTC Sunday update. What a week. So many emotions in play and a lot of volatility to trigger those emotions. This is not a week that you want to trade, especially if you are new to trading. I definitely want to hit that home to you guys. He's 100% correct. CPI is on Tuesday, interest rate decision, and FOMC economic projections on Wednesday. The CPI, okay, let's skip that part. He says, Powell mentioned a month ago that a moderation in interest rate increases was coming. The market reacted positively and it pumped. They'll likely announce 50 basis points on Wednesday. How is that bullish in the long term? How is that bullish? The Fed will keep rising or raising interest rates as long as inflation and strong labor market is still a problem. That's why I think this is still a trader's market and not an investor's market. I agree. This pump was expected. The bear stands before the attacks. Recession is here, and experts expect a pivot to come in Q2 of 2023. It's important to analyze the macro and news announcements nowadays. Liquidations, this is the very, very important part for you guys. Liquidations in 1 month time frame, $17.5 to $17.8 thousand. Bitcoin price is a major liquidation zone or liquidity zone. We can see that during this relief pump, the long liquidations around 15.5K and $15,000 have now increased. And also the liquidations below $14,000. Remember, the market moves towards where the liquidity lies. This move seems that it was to induce retail to provide additional liquidity. And if you zoom in over there, it shows on these heat maps the exact levels that are lying there with the liquidity. In 7 days time frame, we can see that the area between 17.5 and 17.8 is also the main zone, but there is a lot of liquidity at 16.5 too. Now, let's have a look at the BTC chart. Okay, because that's a whole lot of mumbo jumbo. So let's look at the BTC chart. He's looking at pretty much exactly what I see over here. This projection from earlier today is starting to play out. The idea is that Asia would start to sell as investors look ahead to the FOMC meeting, so front running to de-risk. Asia session tends to dump. Monday holds or waits. Tuesday and Wednesday are volatile days. They spike up to, so you're looking for upside move to liquidate before the major dump. Here's from high block, it's the liquidation levels. They lie between 17,450 to 17,800. I am looking for 18,150. I'm looking for higher than that, but I will de-risk into this zone over here and take off some of my positions. So I hope that helps. That's what I'm looking at over there. Here you can see I've labeled it liquidity grab on the top. Now, from a exponential moving average perspective, price is now back below these zones, and ultimately you want to see this area on the left defended on the 4-hour chart. You guys know that is 16,700. Anything under there, it's a hard stop for me. I'm completely out. Risk is to the downside since price is below all the different EMAs, so not good in that regard. Low time frame, we've fallen back below the mid-range over here. You can see the way that this key 2017 level is very, very sticky. It wicks into it, comes down, small deviation back down, tries to get above, smash back down, wicks into it, wicks into it. It's a very, very sticky area. So when we do clear this level, I think that especially if we start to hold above it, then I think we'll get to that 18,150 very, very quickly. But that's your level. just mark it off hourly chart, 2 hour, 4 hour, whichever chart you use. This is your zone you want defended. If you start to see that level get lost at 16,700, anything under that, you probably want to exit that position. So you can see I am holding the long. Nothing has changed over here. Here was my entry. I'll scale more in if we start to get below that region. Okay, moving on to the fun stuff, which is the giveaway for you guys. I hope you've all voted. Let's grab this and pull it across. All right. Time to vote. If you want to participate in this, all you need to do is go have a look over there, sign up to BYBIT. You get actually up to $30,030 in sign-up bonuses, which is the highest that's in the entire industry. Use my link over here. It will greatly help me. Doesn't cost you anything. It actually helps you because you're getting the best sign-up bonus. Deposit $250, and then you will be placed onto this Excel spreadsheet. So we have up to 5,765 numbers, which I've mapped out there, and we're going to generate one random number. So let's just quickly refresh this, and then I'll get the boxes ready. Okay, let's put the hat on. Otherwise, it's not official. Who is going to be the winner, and which is the winning box? Okay, it looks like box number 1. Will there be wisdom in the crowd today? Let's start with box number 3. Box number 3. Box number 3 is not too bad. That is $400. $400. $400 for box number 3, and the winner is box number 1. So let's go into box number 2. If you chose box number 2, you would have also a pretty decent prize, $750. That makes me think the next one's going to be less. So, but let's see. We'll find out soon. Okay, box number 1, and let's use the auto generator. Who is box number 1? 1,362 on our list. 1,362. Let's go to that. 1,300. There we go. 1,362. So it's number 270-417-20. If that is your number, then you need to contact giveaways@cryptobanter.com, and they will make sure it's deposited. You have won. It is the smaller prize today, $60, but $60, it's not too bad. You can probably buy 10 cups of coffee for that. So free coffee. I mean, what can you hate about that? Free coffee. All right, guys, that brings us to the end. Thank you so much for watching. I appreciate each and every one of you. Please do me a massive favor. Hit the like button. If you did get any value whatsoever from the stream, please hit the like button. I do appreciate it. It helps get the video out. Hit the bell notification and subscribe to the channel as well. And we'll continue to do the giveaways until Friday, which is for the festive season. And yes, $60 is $60. Thank you all for watching, and enjoy the quick little Christmas tune. See you all tomorrow. Cheers for now.